Welcome to the World Wire Update. Don't forget to subscribe and click the bell icon for more updates and thrilling short scenes. For more than 100 years, the Panama Canal has stood as the backbone of global trade, a vital artery that has powered the movement of goods between continents and shaped the world economy. This marvel of engineering, connecting the Atlantic and Pacific Oceans, was once considered an unbreakable link in the global supply chain, a symbol of human ingenuity and ambition. But today, the canal's dominance is slipping away, challenged by forces it can no longer control. Drought has shrunk water levels, congestion has caused costly delays, and new rivals are emerging to threaten its future as the world's shipping superhighway. The world can no longer afford to rely on a single route. Competition is heating up as nations and companies seek alternatives to keep global trade flowing. China is leading the charge, investing billions of dollars in alternative corridors across Central America, determined to secure its own trade routes and influence. Railways, ports, and new alliances are rapidly taking shape in Mexico, Nicaragua, and Honduras, each project designed to challenge Panama's monopoly and offer new options for global shipping. These ambitious projects are already under construction, aiming to bypass Panama entirely and reshape the world's supply chains for decades to come. The stakes are enormous. Climate change, economic ambition, and shifting power dynamics are all colliding in this high-stakes race for control over global trade. As the Panama Canal struggles with historic drought and mounting pressure, these new routes promise greater speed, reliability, and lower costs for shippers worldwide. The era of quiet dominance is over. Global trade is entering a new, fiercely competitive chapter, where innovation and adaptability will decide the winners. The race to build the next great interoceanic corridor has begun, and the outcome will shape the future of world commerce. At the center of this new rivalry is Mexico's interoceanic corridor, a $50 billion land bridge connecting the Pacific and Atlantic. Stretching across the narrowest part of Mexico, this ambitious project aims to transform the region into a global trade powerhouse, reshaping the flow of goods between continents. Backed by major Chinese investment, this high-speed rail and port project is designed to rival the Panama Canal. It's not just about moving goods, it's about creating a new, faster gateway for international commerce, with China at the forefront of the transformation. China's strategy is clear: secure faster, more reliable access to US and European markets, while reducing dependence on Panama. By investing heavily in Mexico, China is positioning itself to control a critical trade route and ensure its exports reach global markets with unprecedented speed. The corridor features upgraded railways, expanded ports, and 10 new industrial parks to attract manufacturers and logistics firms. These developments are expected to create thousands of jobs and turn southern Mexico into a major industrial hub, drawing companies from around the world. Initial freight operations are already underway, with full completion targeted for 2030. As construction continues, the region is already seeing increased economic activity and growing interest from global investors. Unlike the slow-moving canal, this route promises to move containers coast to coast in hours, not days. The efficiency and speed could revolutionize how goods are shipped between the Pacific and Atlantic, saving both time and money for shippers. Intermodal transport, combining sea and rail, makes the Tehuantepec corridor a formidable challenger. This seamless integration allows for rapid transfers and minimizes delays, giving it a significant edge over traditional shipping routes. For China, it's a geopolitical masterstroke, building influence and economic power right next to the US. By partnering with Mexico, China is not only expanding its trade network, but also strengthening its presence in the Western Hemisphere. The project is moving fast, and its success could redefine trade in the Americas. If the corridor delivers on its promise, it could shift the balance of economic power and reshape global supply chains for decades to come. This is China's bold bet on the future of global logistics, a gamble that could change the way the world trades forever. The Panama Canal is in crisis, crippled by severe drought and shrinking water levels in its main reservoir. Fewer ships can pass each day, causing massive backlogs and weeks-long delays. Shipping costs are soaring, and companies are scrambling for alternatives. The 2016 expansion, meant to boost capacity, now worsens the water shortage as larger ships require even more water. the canal's reliability is shattered, disrupting global supply chains and driving up prices worldwide. Long-term fixes like new reservoirs are years away and costly. The world's dependence on a single, climate-vulnerable route has become a glaring weakness. This crisis is accelerating the search for new corridors, and Panama's monopoly is fading fast. Mexico isn't alone. Nicaragua and Honduras are racing to build their own trade corridors. Nicaragua has revived plans for a new canal, with Chinese state-owned firms already signing on to build key infrastructure. For China, it's another strategic foothold. For Nicaragua, a shot at economic transformation, Honduras is pushing a $20 billion dry canal, a network of highways and railways linking Pacific and Caribbean ports. China has shown interest, but financial and logistical hurdles remain. Despite delays, these projects are high priorities, fueled by regional ambition and Chinese capital. The competition to reshape trade in the Americas is now a multi-front contest. Unlike Panama's waterway, Mexico and Honduras are building dry canals, land bridges powered by high-speed rail and modern ports. Massive ships unload containers at one coast, which are whisked across the country by train and reloaded onto ships on the other side. This intermodal model slashes transit times from days to hours, ideal for high-value, time-sensitive cargo. Automated cranes, double-stacked trains, and advanced logistics software maximize efficiency. Industrial parks along the route add value, letting companies process goods mid-transit. Nicaragua's plan is a true wet canal, but with modern engineering and ports for the world's largest ships. All these projects are designed to outpace Panama, handling more cargo, moving it faster, and promising greater reliability. The future of trade is being built on speed, scale, and innovation. These mega-projects face serious local and global challenges. In Mexico, environmental groups and indigenous communities are protesting deforestation, pollution, and land rights violations. Security is a major concern. Routes pass through areas plagued by organized crime, raising risks for cargo and investors. Funding is another hurdle. Chinese loans could leave host countries with massive debts if projects underperform or stall. There's a real danger of white elephants, impressive but underused infrastructure saddling nations with long-term costs. Environmental impacts are huge, especially in Nicaragua, where dredging could devastate freshwater ecosystems. Balancing economic growth with environmental and social costs is the toughest challenge of all. The rise of new trade corridors is redrawing the map of the Americas, ushering in a period of rapid transformation and competition. As global commerce evolves, the region is becoming a focal point for innovation in logistics and infrastructure. The Panama Canal, once the undisputed gateway between oceans, is no longer the only option. Mexico's ambitious interoceanic corridor is already capturing market share and attracting international attention. If successful, this corridor could shift billions in revenue and create thousands of new jobs, positioning Mexico as a logistics powerhouse and a critical link in global supply chains. For countries like Nicaragua and Honduras, these projects offer hope for economic transformation, promising new opportunities for growth and development. But they also bring the risk of mounting debt and potential environmental harm, raising questions about long-term sustainability. China's deep involvement in financing and building these corridors signals a new era of influence, challenging U.S. dominance in its own backyard, and reshaping the balance of power in the region. The U.S. now faces the prospect of its own trade flowing through Chinese-backed corridors, raising concerns about security, control, and the future of American influence in the hemisphere. The future will likely be a complex web of interconnected routes, with multiple players vying for dominance, rather than a single winner taking all. Panama will adapt to the changing landscape, but new corridors are poised to capture high-value, time-sensitive cargo, shifting the dynamics of regional trade. This growing competition brings more options for global commerce, and with it, heightened geopolitical tension, as nations vie for influence and control. The race for the canals is on, and it's reshaping not just trade, but the very balance of power and opportunity across the Americas for decades to come.